Good morning, traders. It is Monday, the 23rd of February, 2015. It's 8:03 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A lot of news overnight. We'll run through that as fast as we can here, try to stay on track. Tentative deal reached between Greece and the Eurogroup late Friday. Greece must still specify reforms they will undertake in a letter. Recent Greek rhetoric still sounds like negotiations on issues. The Greek government spokesman reiterated that the promised list of reforms is to be sent later today. Note that the deadline is midnight in Europe. And would include reforms against tax evasion and corruption, discussing with EU members to ensure the list was accepted. Reiterated, sought a mutual beneficial solution, but Greek red line still applied to restore collective bargaining, will not cut pensions. The latest and greatest is that the Greeks are saying that the list was sent to the Eurogroup, and someone from the Eurogroup says we didn't get it. So it's interesting. So at 4:45 Central, it's supposedly the EU Commission in Brussels got the list, but the EU spokesman Andrieva says they have not received the list from Greece at this time. Maybe the dog ate it. German IFO business climate survey misses expectations, but still improves for the fifth straight month. Equity markets open higher as traders await details relating to Greece's planned reforms. The DAX hits fresh record highs ahead of the IFO data, but then the market lost some of its momentum, some of its gains on the miss by the German IFO. Greek equities are closed today for Ash Monday. EU's Moscovici says there's no plan B for Greece. Only goal is to keep country in the Eurozone. So there you have it, folks. It doesn't sound like there's too much risk for Greece for delaying as they have to come to some sort of a conclusion on this. There's broad-based buying in the U.S. dollar seen in the session ahead of February's Yellen biannual testimony. That testimony is tomorrow and Wednesday to both the Senate and the House of Representatives. The greenback gains against all major commodity-related currency pairs. Turkey's economic minister says current level of interest rates is unacceptable. Expects a rate cut when the central bank meets on Tuesday, February 24th, which is tomorrow. Also, in Poland, they're saying they have room for a 100 basis point cut and expecting 50 in the next meeting. So you can see how these central banks are moving. Also in Denmark, the Danish government or the Danish central bank is about to make moves, allegedly is about to make moves to defend the kroner against the euro. So as I've been talking about for quite some time, for those who've listened, there is a currency war out there. They will not admit it, but it's there. The value of the currency certainly affects how the economy does, and so that's what it's being used for. Fed's Lacker, a hawkish FOMC voter, says keeping the patient language wouldn't preclude a June rate rise, and removing patient language wouldn't guarantee a June liftoff. I think this guy can keep saying that all he wants, but the fact is, I believe that there's just very little room for the Fed to do anything here. Looking ahead, at 8:45, just 15 minutes after the open, 8:45 Central, all times are Central, Chicago times. 8:45, we have ECB Speaker Mersch speaking in London. At 9, we have January existing home sales expecting 4.95 million. At 9:30, we have Fed's Dallas Fed manufacturing activity expecting negative 4.0 prior negative 4.4. And then at 10:30, we have the usual 52 billion 3- and 6-month bills. Since it's Monday, let's look ahead at the week. We have tomorrow. It's by the way, it's a pretty busy week on the calendar. A lot of speakers. In addition to the Greek thing, tomorrow we have Case Shiller. We also have services PMI, consumer confidence. We have Richmond Fed, and then we have ECB's Draghi testifying to Parliament, as well as Fed's Yellen. And then after the market, we have Hewlett Packard earnings. On Wednesday, we have China HSBC manufacturing, MBA mortgage applications in the U.S., U.S. new home sales, crude oil inventories, and then Fed's Yellen again, and ECB's Draghi again. On Thursday, German unemployment rate, German unemployment, and then we have UK GDP. And in the U.S. session, we have U.S. Initial and continuing claims, U.S. CPI, durable goods, house price index, Kansas City Fed, which is a low importance number, but it's there, Fed's Lockhart, and ECB's Lind speaking. And then Friday, we have the CPI at various Euro countries, U.S. GDP, U.S. personal consumption, ISM Milwaukee. We have Chicago PMI on Friday and pending home sales, as well as Michigan confidence final. And then we also have Fed's Mester and ECB's Constancio, as well as Fed's Fisher speaking on Friday. It's an action-packed week, so keep your powder dry. Make sure you're not getting too excited and kind of exceeding your risk limits as the week goes by. Just be patient. So let's look at let's do what we always do and look at where we've been and determine what we've done, how good of a job, what we're trying to do, and what's likely to happen from here. So if we look at what we've got here, let me shrink these. A nice explosion in range and in volume on Friday on an up move, which we don't see often. So what we have is from October 31st, as you've heard me talk about for months now, up until the 12th of February, we've been in balance from 63 to 88.75 in the March contract. And we roll over on this in about 2 weeks. And what we have is a market that's just made new highs, but has tested and retested and tested and retested, has built quite an interesting and very, very balanced microcomposite profile in the area. 88 million contracts traded in that area during the day session alone. And then we finally broke out on the 13th, which was a Friday about a week ago. And since then, we've gone into another balance area. So we've moved from 2088.75 to 2098.75. We took out the high by 10 points. And for the first time in quite some time, we've actually hung in there with these new highs. We've pushed the highs further to 2099.50. The target that I've been talking about is exactly where we are now, 2103 quarter. We're trading 2103.50. And then on Friday, after a pretty quiet, and remember this last week, all we did was zigzag pretty much every day, just zigzag up and down based on whatever's going on or whatever's expected in Greece. So until Friday, if we look at the balance that we've had, Friday 93.5, which was tested beautifully on Friday. Friday's primary hypothesis was for what? It was for responsive buying back to 92 quarter, also 93.50 and 95 and a quarter. That area we're looking for tests, and we're looking for sellers to step in, and that was the goal. So 93.50 being the composite point of control at that point, The composite starts again on the 13th, Friday the 13th of February, when we moved up out of our balance, and we've basically cycled through these levels in balance. So we include those in a composite. We actually include today in the composite as well, because today, not today, I mean Friday, because that is also in balance, as we see here. So Friday took out the went up to 93.50 on the nose very early on, found sellers, nice excess high here early on, and then it broke through and it pushed again, as I said on Friday morning. The one-time framing up has ended. We had a lower low on Thursday by a point, so I was looking for selling. Unfortunately, the news did not once we opened, everything was a-okay until the news came in, and of course it canceled that idea. You can't trump news, as the market has to reprice the S&P 500 and whatever product you're trading based on whatever's driving the market at the time, which is what's happening in Europe. So what it did is it pushed through by 2 ticks on the balance. Looked great for a push down. My goal was the 71 gap zone below. That's the primary target. But what happened was it pushed back up in and through the mid and into the opening swing. So we look at Friday here. Nice, beautiful, responsive push up. Opened in range, out of value, pushed into the 93.50 on the nose, and then sellers came right in. This is a beauty here. 8.5 points down. This is what we like to see. We like to see this responsive buying up, and then we like to see sellers step in at key levels. This is classic volume profiling. Volume profiling and a trade setup for me. And we pushed into the 82 quarter. We took the impulsive move here. We extended it and we tried again. We had a 1 tick failure here. It took out the low by a tick. Buyers step in, give us the mid at 88 quarter. Another beautiful setup. 87.50 being the prior day's low. And there's some confluence here, 87.50 with the 88 quarter. 87 quarter was tested early. This is the prior day's low. Again, trying to get back into the range. Gave us a nice little 3.5 point rotation. And then failure on the shorts. So from this point on, all hands off the shorts. And the market went into balance for quite some time. And then it started to push higher in and towards that 2103 quarter measured move target, pushed to 2105, and then it ultimately continued to push and push. There's quite a bit of volume in this move, and you could see that the structure that's left behind by the profile is not. It doesn't show a very complete auction. We did not. How does a complete auction look? A complete auction looks like would be ideal, or an ideal complete auction would look like point of control moving, then the market trades higher, then the point of control steps up a little bit, then the market trades higher, consolidates, point of control moves up, point of control moves up, point of control moves up, meaning that the market's accepting those higher prices and is trading quite a bit in those areas. What you have here is the point of control hanging in there and then making its move on the close. The way this close ended up is we have a very weak high here at 2108.50 with the high at 2108.75 with the point of control at an extreme. This turned into a trend day profile, has exceeded 2 times the IB and has closed with the point of control at the high. So what this is an incomplete auction. This is an incomplete auction on the upside. The expectation overnight, yesterday's Globex session and coming into today, the expectation was we would push through that 2108.75 and test higher. We have not. So when we look at the overnight session, what we get is basically it reopened sideways, has we reopened right where we're closed, no gaps, nothing. And then it has had a hard time holding on to higher prices and has moved lower. And we have somewhat of a two-prong profile with some really, really bad or really, really low volume. The volume so far is 96,000 contracts with just 12 minutes to open. That's very low. That's less than half of what it normally is, or the 20-day median average is. So it's very interesting that it's floating down with no volume. This tells me that there's really no conviction on the sell side. This is just being allowed to drop as opposed to aggressive sellers coming in and pushing it lower. You can also see it in the delta here. Let me scroll this delta out so we can see today's delta. You can see the delta here. It's just pushing both ways. A push up brings in sellers. There's really not that much. It's not really violent selling. So to me, the primary hypothesis for today has to be that the market's likely to test down into the point of control from the overnight early, and I expect buyers to step in to take it back up to 2107.50 to retest the point of control, and then I expect the overnight high to be taken rather than the overnight low, and I expect new highs up into up in and through the 2108.75. That's my primary hypothesis. Now, the better hypothesis for day trading is the opposite. The better hypothesis is for it to open, become responsive, push towards 2107.50, fail to do so for whatever reason, and then for it to turn over and take back and return to the scene of the crime. Remember, this is a news-based move. News-based moves very often go back to the scene of the crime, and I expect that it would roll over and then get back into line with the 2095 area. That's hypo 2, not hypo 1. Hypo 1 has to play with the trend. We've got to play with the trend because the market overnight did not take that information back. We're still waiting for this Greek thing. We're looking for the proposal to get to the Euro group and get approved. But so far, we're not hearing anything. So the market's in a holding pattern. This is a holding pattern. We've done just under 7 points overnight after such a big day. The market's basically on hold. I'm over my time. I know. Let me hold on to you for a couple more minutes. I want to show you with crude oil real quick what it has done. It has balanced down below, and then it has pushed to this 55 area in the new adjusted April contract. It's a 55 and has gone into balance between 55 and 48.71. Perfect balance here with the point of control at 51.83, and it's stuck here. And then this morning, it's opening on the extreme. So what I'd like to see, what I'm expecting on crude is that unless news comes out to push the other way, it's already trading in a responsive fashion. So as I switch here to the 6 Renko, you can see that it's already responsive. The market's already responsive, which is what's expected. I expect it back up towards 51.15 and 51.83, and then for it to go into a holding pattern and chop again. But it's opening out of balance, but within it's opening, even though it's gapping down, it's opening within the overall microcomposite balance that we're in between 55 and 48.68. Okay. As far as the Euro stocks, mission accomplished. They have remember when we started talking about the Euro stocks, they were way down below and imbalance down here. We talked about the fact that there is, and now it's filled in. There's an LVN composite LVN zone up to 34.40 and 34.50 is the main target. 35.53 is the main target above. Look at where it is. 35.39 stopped ahead of the 35.40, which is the LVN zone. Beautifully done. Well done by the Euro stocks here. And they still have it opening up at 35.53. It's still waiting for news to come back in. Note that it slid on the overnight news that's on the IFO number from Germany. But overall, this is a very healthy trade. Nice balance before the break yesterday. So the value high here is important, 34.93, and then we have a point of control at 34.87. But overall, the Euro stocks have done exactly what we would expected according to a proper auction. I've held you too long. Sorry about that. But there was a lot to cover today. I'll be on Day Trading Radio at 10 Central, 11 Eastern, and I'll catch you tomorrow if you listen in. Thanks for being here. Take care.